Test 1, 2, 3, test. Okay, good morning. This is Dana Shute. I am the president and founder of Top Gun Trader's Edge and Top Gun Trade Zones. And this is just an introductory video to show you live recording of just some of our things that we look at and set up. It's going to go kind of fast and furious, and I don't have any set structure to it. I'm just going to show you the way I trade, but I'll probably look at a few extra things while we're doing it so I can describe to you some of the things we have. So I have 6 monitors. You don't need 6 monitors to trade this method or to follow us in the trade room. I have 2 websites, Top Gun Trade Zones, which is a proprietary support and resistance, algorithmic support and resistance. It changes every day. Those come out in the morning. You can go to the website, topguntradezones.com, and read all about that. They're pretty, I've been using them for, in one incarnation or another for 20 years, but they've been coded in just the past 2. That's how long it took for it to get them to the way I wanted. We don't charge a whole lot for them. I mean, it comes out to be, I guess, per market, like $2 a day or something, $2.50. Yeah. So take a look there. The other website is Top Gun Trader's Edge. Both of these are getting ready to launch in the end of November. And this is Top Gun Trader's Edge, which is going to be a mentor site, trading trade room. There's a whole plan for that as far as phases go, and you can look at that at topguntradersedge.com. We're 4 minutes from the open. I'm going to take you a quick tour around here. We have several different methodologies. One's well, they're all proprietary, but one more so than others that we took the last 2 years to develop. So up on this screen, these are one particular methodology using moving averages, and the signals will come on here. Then we go over to this particular chart here, which will have the entry where we take the entries on those charts. Those signals don't come all that often. And just still, everything's set on sim because I'm trying to describe all this and do things at the same time. So we trade in the room, we trade funded trader accounts and stuff. Okay, down on the screen here, I have tick strike. So you can hear that in the room. You hear that. I have multiple aides. Having been a former test pilot in Navy fighter pilot, I have redundancies of sound and video images. I also traded on 4 different exchanges for a number of companies. I traded for myself in the OEX and the S&P pit. So kind of for 20 years, so kind of know what I'm doing with this stuff. This is an alert system based on this method right here, which is kind of the crux of the whole system. This shows visually and audibly setups and signals. What it's meant to do is I'm following 6 markets, but you can follow like, just 1 or 2 or whatever you want. But for me, I want to make sure we get trading opportunities in the room. I'll get into that a little bit more later. Here's a tick in a couple of other internal indicators, which are very important. our leader laggard chart, news. So there's that panel, and we're running on it 2 minutes. So let's just take a quick look. I have four other panels, for 627-inch panels. So let's just take a quick look and see what we're working with here with this craziness lately. So here's a 15-minute chart. Let's take a quick look here. These have the proprietary zones on them that come out in the morning at like 7:30, 7:45. So you can trade them pre-market. You can see we came up. So these have been on here since about 7:15. So you can see we drove up here into this pivot point into this proprietary zone, got rejected, came back down. We're holding these two zones. This is the overnight range. There's a lot of stuff on this chart. So, but this is all key information. You will learn how to trade if you belong to our room. There's no replacing actual knowledge, and there's no bot or indicators. And I used to work with many companies and evaluate bots and things, and they were like 700 times more sophisticated than what's out there in the retail market. And even those are only meant to exploit inefficiencies in the market temporarily. There's no bot out there that's going to replace the ability to read the market in real time. The bots that are created that actually work are for inefficiencies in the market, and they're designed that way, and they're all portfolio based. People keep looking for like a holy grail, the easy way out. Just learn to trade. Okay, so again, we're coming in the open. I think we got about 30 seconds, 15 seconds. So I'll just show you. We don't trade in the first 5 or 10 minutes unless there's a really good setup. But you can see we're in a consolidation since last night, after all this crazy, things that have been going on with the different economic news and things. So right now, there's a little bit of a trend line there. We're nothing really, there's not a strong trend line. Okay, what you hearing there? I mean, we just opened, so you're going to get a lot of signals. These will filter out. So we're getting calls right now, but basically on this chart here, red and green are aligned, meaning that across multiple time frames and algorithmic settings, these are the strongest trending markets. These will slow down when we get to, out of the first 5 or 10 minutes. So like right now, the YM market is technically aligned down. So I do a lot of cycle work. So the cycle is actually up. So right now we're pushing up. Orange is a conditional short, means that you want to confirm with other indicators that we have. Red is kind of like fish in a barrel, kind of shorts. Green is the fish in a barrel longs. Gray is sit on your hand. So what we're looking at over here is if I go over to that chart, and again, it's early in the session, so we don't typically trade right away, but we'll see this reversal right here. Okay. So if I wanted that, I'd be in it just like 98. And then I always use the ATMs. So and we are very strict on risk control, because ultimately that's what determines your success. So we'd be in at 98, and we're already 20 points there. So this is a legit signal. I mean, you could take it if you want. It's just early in the session, so it's just there's plenty of opportunities. There's always more trades. So, and then you'd be taking partials into there, probably be at break even. We tend to focus more on momentum trades, because that's what works with everyone's trading funded to trader accounts. I didn't, for me, for the last 25 years, I traded my own money or firm money, and it was real money. There was none of this funded trader stuff. So with the trailing drawdown and all that, you need to take bursts and take singles and doubles, and not swing for the fences if you want to use connected accounts. Copiers and stuff. So that one, 20 points, $100 a contract. But the whole point of this is that you'd be partial, or if you're all in, all out, you'd be all in and all out. If you're doing a couple contracts at $200, you multiply them across multiple accounts. So let me just, it's crude. There's a methodology to this one. This is how I track all the markets simultaneously to make sure that, to see how they're interacting. They're all highly correlated. They're the indices, but there's always a leader and a laggard, or at least most of the time. So you're better off trading the strongest when the market's up and trading the weakest short when the market is down. But you got to be careful when they get too separated, because then there's a chance for the computers to take over, and then basically that relationship will reverse. Okay, let's see what we did here. I'm going to move this over here. I also, so we got a Dow again short, and what it's doing is it's telling me that the cycle is up and it's pushing up a little higher. Now there's a trend line in here. If this were to roll again, we might actually take this. I don't know why this is set for 10, but I don't need 10 of these. You got a Russell as well. Russell's right here. Everything's bouncing. Okay, so that's why we're in, the trend has been down. So NASDAQ just got an entry signal. Let's see. I gotta get, a lot of times at the open, we're doing support and resistance structure trading. Here's the NASDAQ. Let's see how we reversed right here. That's what it was calling. So, I mean, you probably been at 46, it got to 40 so far, but we might be able to take this one. That's really small numbers. But you can see how this one worked right here. See, $105 already there. It goes to break even. If it snaps back and takes me out, I don't care. See, this NASDAQ trade gave, what would we say, 48 down to at a low of 34, 14 points. And we're watching here. You see how it came into this? We came into that zone, proprietary zone, and we're bouncing. Okay. So this is the kind of thing where the TTF, which is another one of our indicators, a tactical trade filter. And I got a 25-page manual that shows how that works. That sounds like a lot, 25 pages, but most of it's just showing you different setups. But there's a core number of setups. Here's $150 already. And I pull this down a little more, break even. This is pardon me, but a shitty. I just it's a. I always take partials. It'd probably be a partial into like 93 or something like that, and pull this down. Add a 2 here. I didn't have this quite set up. So something in there, and then a 1 lot if we get down there. Probably stop me out by the time I get all these in. All right, so we're holding this trend line here on the NASDAQ. See what the ES looks like. Right now we're consolidating after all this news like yesterday and things. You have to be able to know how to switch between support and resistance, structure trading, and trend trading. When it's trend trading, you want to jump all over it. When it's structure trading, it's support and resistance and smaller targets, but our software helps, whoops. Okay, so we got filled. It was $300. We got filled on that. Killed this thing. This is sloppy, messy, but it's still valid. We get a $135 trailer. Here is where we typically, the tactical trade filter, the line right here. A lot of time that comes into support. Now it's not this fast in the room. I mean, it is near the open, but once you understand what we're looking for, or you're looking for, and I'm looking for in the room, then it goes a lot. It makes a lot more sense, and it would be a lot slower. I'm just trying to describe everything here at once on the chart, just as an introduction. But see, I'm pulling this drop down here. We're bouncing there. Okay, we're out of that. Let me close all that. So $325, you could be done. Boom. That was, and how much risk did I give that? Not a lot, right? Um, okay, see, we came back, pushed back down. This is a 15-minute chart. We pushed back down. This is why I watch the structure charts. Okay, that tells me what I want to be doing on the other charts. So if I, and that's a lot mostly in the opening time frame. Let me see if I have I hit the wrong one. I meant to reload the okay. See, there's our zones. You can actually turn them on and off if it gets a little, clustered. If you like to trade a little cleaner, you can just push the button up here and that actually will turn them off. So you can kind of see this is the opening overnight range, which is a key area. That's the open and close of the first hour last night and the mid range. So when you look at these and the green lines and red lines, those are our version of, we'll call them, for lack of a better term, fair value gaps. But we help to use those to identify entry areas in zones. Zone trading is tend to be more swing trading. So if you're buying this zone, this gives you a target. So you're being at like 29 and you're at 53. And you probably want to be partialing out at the top of this zone or into this OR high and mid right here. See how we just failed right there? Okay. So between the two of these, like when it's structure, we're watching mostly this type of style. And once we break out of this and we get all aligned, and this is, chunks of red or green, like this, or like this is, a good up market. When it's mixed, when it looks like this crap, that's when you go to structure. You go up, you go to support and resistance, and we've got a lot of tools for that. And you go to smaller targets. It's just like a professional. I believe it or not, I was actually in casino management out of college in Atlantic City. But so I know a lot about gaming and game theory and things. But one of the things is, you probably know, a professional blackjack player, who counts or knows basic card count, will vary his bet size according to the odds if they're in his favor. When they're not in his favor, he bets the minimum that the table requires. When the cards are in his favor, he bets, the maximum, or he increases that size of that bet. Well, most traders have no idea that that's all trading is. It's game theory. So you want to be able to adjust your bet size accordingly. So if the market is iffy, well, one, you should be sitting on your hands or taking smaller positions and smaller targets, but you still, and then focusing on what the trade location is. The trade placement is critical. Then if you are in a trending market, strong trends, well, then you want to bet the farm, and so to speak, and you want to jump on those entries and lean on them. It's kind of like, the analogy of a surfer or a sniper, where you lie in wait, waiting for the best setups, and when it comes, you got to be patient. Like a surfer, waves come in sets of three, and there's a lot of junk in between. If you get on some of those junk waves, you've missed the big ones when they come. And even in the set of three, you're waiting for that. It's trading is a lot of, waiting and understanding your setups, being patient. I usually have beta music playing in the background, but I didn't turn it on for this. But that helps keep things calm, keeps things, you maintains your focus. In a lot of trading rooms, guys listen to that. They don't go rah rah. They aren't hitting the desk. It's very quiet. I've been in a number of them for the best companies in the world. So, they don't, it's what people think is trading, and they see on YouTube videos and TikTok videos and Instagram, and it's crap. That's just, those people don't make money on trading. They make money selling you courses, or they just make it off YouTube viewership because everyone's looking for the holy grail, which does not exist. Okay, so there's a scalping methodology. So we're only 12 minutes in here. Let's see what we're doing. See how quiet it got. We're kind of digesting this stuff. We can draw a couple of lines here. This is a 5-minute chart. This is kind of like primarily an interim time frame that's really useful with the this is used more for our entries. this is duplicated. You know, I got a neat tool here, which is really helpful. And I use this in the room. So this, okay, it duplicates what I have on my tracking chart, which is this. So all this is duplicated on each one. So this is like, for instance, ES. So it's the exact same thing appears over here. So if you have software will be coming out next year, but I want everyone to understand and see how it works in real time and get the confidence in it. So in the trade room, you don't even have to buy it. You can just trade in the trade room. But the whole goal for most people is to become independent. So it will be like leased, and you know, anyway, you'll get the confidence of watching it work in real time and understanding how it works, which is why I have like a phased rollout. Okay, so you can see we're stuck in the overnight range. We're in this consolidation pattern here. So you can see we keep holding here. See, we're holding these areas. This is MES, and this is the NASDAQ. People don't understand. Also, the computers they program everything. Look at the trend line right here off these wicks. People think like, oh, you know, they hear trend lines don't work. Bullshit. Fibs and trend lines work because they're self-fulfilling prophecies, and computers are coded by people to recognize these. People just don't understand these things, and they believe all the stuff they see on YouTube. Yeah, there's so many bullshit artists out there who know absolutely nothing. They don't even tell you their name, and people are like sitting there investing their time and energy. Forget money, just your time and energy. You're wasting it. It's like you spend a year watching somebody who doesn't know what the frig they're doing, and then you realize it. So you not only wasted time and energy, you might have wasted your whole opportunity and given up on trading because you followed somebody who's an idiot. Or even worse, taught you bad habits. I mean, there's so many bad things that can come out of that. Teach you bad trading habits that then you got to shake off. Bad psychology. You know, also it's if you don't align with the right people, you're screwed. See how we pushed up into this trend line now, and this is like an internal trend line. So let's see if we can break out of this. It's also a Murray math level in here. See, we're making an attempt to break out, but we should probably fail at this high the first time. Either here or here. Hit that and fade back to the like near down here. See, we're both breaking out on both of these. But see, we're gray now. See, so we're in between. I'll show you the scalper if I can dig it up pretty quickly. That's an ES. And that's not the one I want. See how we faded there? Oh, the sun came up. All right, what'd I say? I said it's going to push into here. Oh, these alerts. These alerts are going to be they're very helpful, but they're also annoying. Come on. Got very quiet again. Okay. All right. So let me put the annotator back on before things change. So what I say, when we pushed up into this the first time, where are we going to stop? Okay. So fade 70, boom, right back down inside this pattern. That's, I think it pulled down to about 53 or something like that. So 17 points, $340 a contract in the blink of an eye. All right. If you know what you're doing, people looking at other charts are going to be like, why did it stop there? And you know, people, I've traded DOMs and all that. DOMs, yeah, I mean, if it works for you, great. But you're looking at numbers and there's spoofing. There's a lot of gamesmanship going on. You know, I can trade a DOM. I can trade, you know, a ladder. I can trade, you know, order flow and stuff. And I know all those. And yeah, I use the charts because the information's on the chart instantaneously. You can see things. I have the volume analysis on here. A lot of these indicators take those things into account anyway, so I don't have to. and visual is just a lot easier for the human brain to process. And it's brain is not, humans are not numerically based. And, you know, but if it works for you, great. There's more than one way to skin a cat, but yeah, good luck on it. Here's another thing here. I'm just, you know, this is more explanatory than trading at the moment. But this is like pattern. We do, you know, and there's the pattern right here. This is from 18 to 12. So that's 6 points. 18, we get a pattern breakout. So it's 16 plus 6 is 22. And that's where we went the first time. It's everything is symmetrical. So that was the breakout. It's half the distance of this pattern. This is all things. I mean, when you've been trading for 25 years, you kind of learn pretty much everything. You know, what works and what doesn't work. And so you throw the baby out. You don't throw the baby out with the bathwater. You keep the good stuff. And that's what I've done here. And I'm still trying to find I want to show you the scalper, which you can just trade that alone. Okay, here it is. All right, see if I squish this chart up like this, boom, all right. I can't even see the price. I don't even need to see the price. So if I go here and put a drawing tool, now I'm just gonna draw it. It's gonna be within, I don't know, a couple of minutes, but when you're watching the price action, you can get the, you know, the filtered, the actual entry. So here's our proprietary directional trend indicator. Here's our cycle analysis, Librem wave cycle. And this is cycle analysis down here. And so trends up here. This is earlier. This is a 16:8 chart. So I'll just show you, like, I have it set for shorts. My pen, I think I did. I'm not sure. Here's red. Now I do. Okay, so trend is down right here. Okay. Before I mark it, I'll annotate it here. Okay, so up, trends up over here, trends down here. Okay, flat in here. We trend, you know, you can take them in here if it's good stuff. There's other things we look at, but typically, you know, it's good to be cautious in there. And there's up. The best trades are going to be aligned when all our cycle is this way, but it doesn't have to be with the cycle. With the scalper, you can trade even against that because it's scalping. But just telling you where you can lean on it if you want to vary your bet size. Okay, so I'm going to take that off. Now that you know that, go back to here where I had the red line. So here's a pop-up, cycles up, here's our signals in here, here's the trends down, we're red. Your entry is going to be like right in here. All right, I'm waiting for this signal and then I'm giving it a couple bars. I'm not looking at price. When we see the price, we can finesse it. So we cycle back up, trends down. Here's the signal. Here's these two signals here. You're in somewhere around here. We cycle up again. We're flat here. So this we may not take. It just depends on what's going on with price, you know, price action. I'm a big price action trader. So, you know, these here are very aligned. So I might do like two contract. I mean, I'll mark two lines because that just means, whoops, more contracts. It doesn't mean necessarily two. It just means you know, these are ones you put more. Again, using the gambling analogy, this is card counting that counts in your favor. You're adding more contracts. This one here, we could be transitioning up. And in fact, we end up doing that. But I'm reading this as if I didn't know that. Then we see the trend up. So now I'm switching over to longs. What am I looking for? Oh, the pen. Okay, so we pull up. Here's the first pullback right here. Here's the signal coming in. All right. So, and again, we'll look at price action stuff. But, you know, the trend has been down, so we're cycling up. But see, this for the scalper, we're looking at this line of being above, and then the cycle being down. And I'm looking preferably for this kind of setup where these lines are green. Okay. So, and it's got to come below. All right. If the market starts taking off, get really strong, you can take like this kind of signal, but you see how we didn't really get below. Okay. So somewhere around there, you could take it if you wanted. I'll just mark it. But so first two are really good. This one and this one and the last one, you know, depends on price action. So now if I just do that, let's take a look at what that looks like. All right, this one here, and again, I didn't even see the price. The entry is actually back here when this reversal candle, we have reversal, proprietary reversal candle. See if I can blow this up a little bit. Move this over. Okay. And I'll get my little drawing tool out. We're starting to turn up and aligning up. So here's your reversal candle. Here's your, it's where the wicks are, the wick in the body change color. Okay. It's a volume type of, it's a composite type of candle that we created. Same thing here. Okay. Then, so there's this one, those three, these are the ones that I said were great. Okay, we added more contracts. This one I said maybe depending on what's going on, but that would definitely be like, you know, half position or something to depend in relation to those. All right. Now I switch over to here, pull this over, and here's our other long. Here's our long. And I said this one is depending. See how these are separated, and we also have these two lines here. These two lines are very sensitive. So if these are both green, that's actually, you know, pretty good. So you could do that one. But here, so big one, half, big one, and maybe half on that one because it didn't pull back enough. But just to show you here, and again, ATMs, you can, the stop's always going to be above on all our trades, that are reversal types. Stop's going to be above the swing. Very rarely does it take it out. So because it very rarely takes it out, whoops, shit. Very rarely, because it does take it out, then that's why we have confidence in putting your stops there, okay? So great risk control. And then we have ATMs that, you know, follow down. And we're looking for like sniper bursts, okay? So we're not trying to get like, oh, we need to get a 100-point move. That's the ego. No one cares. This is, you know, you trade what works and you trade for your account. Well, the accounts, if you're trading multiple accounts tied together with a copy or whatever, then this is what you're doing. You're not giving back. You're not letting an account go up $1,000 and then back to 300 because your ego wanted you to get the biggest trade. We have ways to do that. And, you know, we use options and things, but you don't need to do that. So let's turn the annotator off. Let's go back here. Let's turn this thing off just to show you. So these are actually, you know, in over here. So that went from 48 to 27, 20 points. This one from 47 to 30, so 17. This one went from 48 to, I just call it 38, 10 points, but we knew that's where you did smaller. You can kind of see what's happening here. We get higher lows coming in. That's a sign of price action, you know, that the market's strengthening. So that in itself tells you like, okay, well, you're not going to bet the farm on this. But if you were just taking 10 points out of this on a 2-lot, that's 20 points, that's $400. And then if you do a half there, that's $200. That's $600 right here on one account. Now look what's going on over here. Here's your entry right here in this pivot. You're in at 60. That one went to 80. There's another, and I'm just taking 10 points out. There's another on a 2-lot, $400. Now you're at 1,000. Here's another one. If you just did a half size, you're at $200. If you take the same thing, but on a half size, you're at $1,200. Yeah, you can see just as easy as I can, but this is the read, okay? Now this is on a scalper, but we're using it in conjunction with our market timing, and we call it wave cycle analysis and stuff, because you can use it on a lot of different tools. So let me get rid of that. Let's go down and take a look at some of what's going on here with all our proprietary tools are actually on these charts. And I use these because I can get a quick snapshot of exactly what's going on in the market. For some reason, the zones aren't on these. These are gaps. But right here, what does this tell you by me watching this? I I get ES, NASDAQ, and YM. I get ES here, right? NASDAQ, what? Russell. Look at Russell. Russell. It's 99% below our opening range here, our tactical trade filter, where over here, when I took it off, it's now marked 84% above, 96%. I can just see I'm here, it's probably about 90. So these are all, the leaders, okay? This like oftentimes is either the leader or the opposite. It's just what it is. So if market started getting weak, what are you going to do? You're going to, when this thing rallies, this is the market you're going to sell. Okay, it's weak, but you got to be careful, because if these get arbitrage will kick in, and if these get too separated, especially if this gets really strong and this gets really weak, then you can see this, if they start to reverse it, then you can see NASDAQ dump hard, and this will actually start going up. It's over here. See this chart? Yeah. So this shows you right here how weak YM. Everything else is aligned. The markets are typically correlated anyway, but once in a while you get this, crazy stuff. They're all jumping on the what we're now calling the Magnificent Seven, I guess. There's always some new name. So we're kind of flat again, but see how this will tell me when I watch this indicator. I can see what's happening. When this was back here 15 minutes ago, the market was down. It was red and orange, but see how it starts to go gray? Okay, so we're shifting, we're strengthening. And this tells me over here, I'm leaning short, and there's short signals in here that all worked. Then we start going like multicolored, but Russell stays red, okay? Gold and crude. Gold is strong, crude is weak. As it starts to show here, you can see we go from conditional short orange to gray, which is like sit on your hands. The market's transitioning. Go to blue, which is conditional longs, and now we're green, which is aligned on multiple time frames long. So this is what we're looking for. Okay. I don't know if we've had any signals on this, but I've been yapping a lot. So just lining these back up. See Russell 99% below on this one, okay? I'll just show you the this is the manual for our tactical trade filter, which is proprietary to us. I guarantee you will not find it anywhere else, but it predicts the direction of the market for the first 4 hours of the day, and often for the rest of the day. You can take trades just off of this. Looks complicated, but it's not. It's really, it just takes a little while to get used to it. But it's explaining different setups, different settings for the indicator. But really, the indicator is not that complicated as far as settings. It's not one of these things where you got to back test it and do all this stuff. It just works. And yeah, I don't have time to really go into it, but that's what's on these charts. And it's a forward-looking indicator that gives you direction. So let's take a look here. Anyway, there are lots of trades in here. We could be up $2,500 per account easily if I was trading this. But I think you'd probably be more interested in how we trade and what it is. So let's take a look here while it kind of quiets down. We're coming into 10 o'clock. Okay, no news. There's no news here. We don't have anything till tomorrow. So here we are at another zone, okay? So if you had bought this down here, okay, and then we have techniques for that. That's on the Top Gun Trader Trade Zones website, topguntradezones.com. So you can see here, if you had bought in the middle of this zone down here in this value gap, I'll just call it 30. We just went 70 points up to 800, 900. Okay. So now, we're aligned long. So you'd be looking for, a pullback to get long. Now, we could peter out in here. So if you were taking this, if you wanted to take a crack at a short in here, you want to be in the upper zone here. You want to be from probably like 95 to 900. And then realistically, you probably would be looking for a fib retracement or something uh, to the problem with fading sometimes is people who try to do too much, you'll miss the bigger. It's kind of like as we were talking about surfing. If you start like getting like, oh, this is cool wave, I'll ride this, and then I'll get in on the big one when that comes and stuff, and then you get in on the little one, and then the big one comes and you miss it. So part of the problem with fading trades is if you take the fade, you've got to remember that the trend is up right now. So this is just a pullback technically to look for a place to get aligned long. So if you're playing both sides of the coin, you got to make sure that if this is your exit, right? If you're out on a trail, that's also your entry to get long. So that's the tricky part. So do you want to just stay focused on the longs, or do you want to try to, because this could come all the way back down to, to here, back to VWAP. Okay. So there's nothing wrong with that. These trades can be great. We play them sometimes with options. It just depends on the overall read of the market. So if I were going to look to short that, then I would probably throw a fib on there and to help with the target. And that would be from the anchor point here. Okay, so we got up to there. So here's the 23.6. So right down here is the 38. And then I look for other things that are in there. If I can click, tell you one of these things. Okay, there we go. So that's, it's marked. We have a fib proprietary fib thing too. So it's already on the chart. It'll adjust itself, but sometimes drawing it helps. So I'll get rid of that once I can click on it. Okay, so if you were selling the upper zone here, right? Like I was saying, let's just call it 95. Again, here's a fair value gap. If you sold 95, you're down to this gap right now. 15 points, $300 on a one lot. You don't need to do 10 lots. You don't need to do 5 lots. 2 lots is fine. And I would do, if it's NASDAQ and you're learning, I would do micros. You can do, set an ATM with 5 ATMs. I mean, that's a half a lot. Okay. Sounds like some kind of weird animal, a half a lot, or 3s or something like that, until you get used to doing it. Or you wait for what's going to happen. See, we're aligned long. Okay. See, along. All right. We're aligned long. So here's the pullback. If you're in this trade short, you got to decide like, okay, is that maybe you're out on your trail or something? Because right now, see, this is technically a long in here. All right. Doesn't mean it's going to play out, but this is what I was talking about. If you took this trade on a zone trade, okay, fade, it gave you 15 points. Well, there's nothing wrong with that, even if you were targeting down here. But you don't want to miss, if the market is moving hard up, well, do you want to take a 15 point if this is going to go like 40? That's, I mean, you can, but do you want to skate on the wrong side of the ice? It's kind of like, people do that. They start, thinking like this. They get in their head, psychology, like, oh, it's going to die here. We're going to run into this magic number or this whatever. It's like, hey, if it looks like a duck, walks like a duck, talks like a duck, it's a duck. If it looks like a trend, acts like a trend, and all the indicators say it's a trend, it's a trend. It's a trend until it ends, as they say. If it's sideways and it looks sideways and it acts sideways, then we're in a consolidation pattern. Then that's how you trade, or you sit on your hands if you don't trade that way, and you conserve your capital. Okay. And then you wait for the market to trade the way you trade. So if you shorted that was a winning trade, and now if you took this trade long, it was this reversal here. I mean, we just took out this high. Let's just say that was a 90, it went to 05. So 15 points. So you could have got 15 points on a fade or 15 points that way. I'm not saying you got the 15 points because, again, I think most people, you should be trading for, look at the average true range of the candles. If they're like 13 points, then you should be going for like 7 points and then going to break even. And then that way you never get run over. You conserve your capital and you're going for high win rates. And that's what most people need with the funded trader accounts. Okay. It's busy. So, okay, what we haven't looked at here is, and the other thing is, here's the internals, okay? I don't think I can draw on, I can draw on this chart. Okay, so we opened up, and this is the advanced decline. We're down, okay? Advanced decline is down, but see, it's not just down, but it's trending up. So it's strengthening. But look at the ticks, okay? And there's different things that you need to look for in the ticks, but there's a lot of these ticks shifted down, even though we're strengthening. So we're kind of like, it's like a balancing act right now. There's forces of good and evil battling it out. And so that's why we're not rocketing up. If this were all aligned, like these were all up and it was green, and this was like, even if it was strengthening, okay, then you could be jumping on some of these longs or holding these. These are all the little clues you need, okay? See how we came up here? We broke at the high. These are things you can learn that it's like this, I would say like, hey, I never say definite, like I know what's going to happen because that's a kiss of death, because you don't. But looking at this and looking at this looking at here and looking at this information in the general market and where we're pushing into, I would have said this, yeah, this is a good chance this fails. So I might sell this up here and put a stop of 7 points. Well, if I did, we're 03, we came back 30 points, okay? It's also a pullback here. We're aligning up long again, okay? See, we pull back, trend lines often get checked out and tested. So, and you got to know how to draw. There's different ways to draw trend lines. This is actually the proper way. I can't teach all this stuff in an explanatory video here. But you could take, if you took this is the test of the trend line. We're still up here. Okay, we're 93% above. So you could nibble at the trend line at 75, add on the reversal at 80, you'd be in at like an average of like whatever that works out to be. I'll call it 78. And we got up to 85. Okay, so that's like 8 points. I would already be pulling my stop up here. Okay, so I'd be in whatever I said, 80, and my stops like be at 75. So the worst I'm going to do is lose 5 points. Okay, you can come back from little losses. You can't come back from psychologically. I mean, people who do these things swing for the fences. It's like, I don't care if it works. You're teaching yourself bad habits. Oh, awesome, you made a $2,000 trade. And the next one you blew your account out. Well, now what's that make you think every time the next time you want to take that trade? If you take a $200 loss and then a $300 loss, and then that's not bad. I mean, if that's in line with your risk parameters, you can take the next trade. It's not mentally as hard. And if it's a great setup, that can turn into $1,000 winner or something. And then now you're up $500. If you take a $800 loss and then, another $800 loss or something, well, what are the odds you're going to like want to jump on that next trade? You're going to be sitting there licking your wounds and thinking about like what you did wrong. And then meanwhile, it's like, shit, I missed that trade. I should have taken that. And then it's the woulda, shoulda, couldas, which is the trifecta of human regret. So anyway, there's a lot of things people wonder, like, oh, it's psychology and stuff. Yeah, well, part of the psychology, comes in from risk control. All right. And people go and they learn these stupid bad habits and horrible things from people who don't know what they're doing and who act like they do. And it's like, hey, put it this way. Anyone who poses in front of a jet or in their Ferrari or something like that, you should run as fast as you can, because you're not going to learn jack shit from them. Okay. Oh, see how quiet it is. All right. There's we're assessment. So here we're green, but these are deeper pullbacks. All right. Russell been steady red. So if you were just like Russell's horrible, I'm just going to trade Russell short. Well, what does that look like? Russell's over here. Okay. Now I have, again, you don't need 6 monitors. I highly recommend 2, because what's great about our system is that you can tab these things. You can have them tabbed and then just wait for setups on like here. and then just go to the tab, have a couple internal markets things. The signals give you audio and visual, references. Notice we came down to this trend line that I drew right in here, okay? And it's also the OR high of the opening range from last night when we opened, all right? And we came into that support. We tested the trend line again, so I would want to be in on like 78 here and pushing up, but let me finish showing you. So let's say you took the Russell, okay? The Russell, and you said and you came in at the open, I'm looking at the price, and you came over here and you're like, look at Russell, it's dog mess, and it's showing it over here, okay? Look how weak it is. So if I don't even look at the price, I just watch the indicators. Okay, here's 9:30 the open. We're not going to pay attention to that. We got to push up here. And again, this isn't the scalper. The scalper would give you more information, but I can do this one. You see how we get a double move on the cycle. I can guarantee you that this is probably a divergence. So if I were in on this, I would definitely add, and I would add a couple. Here's the next roll up. I wait for this to kind of roll over, sometimes cross down. I'm looking for these signals here too. But because this is red and so weak, I want to make sure I'm in. I might do 3 on this or whatever, just more, okay? And so this would be that from the open. All right, now you tell me if you can make money with that. Tell me if you can follow that method. Is that difficult? I don't think so. So even if you went to break even here, you're out of break even, maybe you get a partial. If your stop's above the trend line, which it should be if you're that, or above the previous swing, but I don't even think you need to do that. A lot of times I would put it above the trend line because I believe in trend lines because I know they work. But even like I said, if you're in at 026, it gave you 1.6, like $160. You get a partial, get a break even there. Now this makes it even a better signal. That's how I refer to it. It's like, hey, if it does this and rolls again, I'm looking for this divergence, and I'm jumping on this. I might even do 3 on that, but I know I'm increasing my bet size. I'm not always doing 1-1-1. Okay, that's not a great way to trade. It's not the proper way to trade, at least if you want to be really successful. So here, like 18 even, we get down to 5 points. That's $500 a contract, and this one just dumps. So you can make a fortune on this. You could retire for the week on that. But again, how did I know that? Because it's the weakest market, and you could just pick that one market. Again, I'm just trying to show you all the different tools and things and giving a kind of cross section of them. So that's that. Scalper. Here's the scalper. So I showed you those. Okay. So like here, this came down. There's a signal right here. That's the entry. That's what we were talking about on the analysis of the higher time frames and stuff. But 90 to 05, and it dumped. So instead of holding this, thinking like that, it's like, hey, you just got 15 points. If you were taking, again, I'm giving it using average to range. So if I'm going for 7 to 12 points on an ATM, yeah, I just average, I just got my 10 or 11 points in here. So that's calling for a short on a CL. See, if I go back over here, CL63, and I can go, this is the higher time frame stuff. We could look at that in a minute. Here's the CL chart. See, we're just crossing over. You can adjust the sensitivity on this for what it tells you. I have it set so we have another long on the NQ16.8, but I have this set so as soon as it cycles up in the direction counter to the direction I want, so i.e. a pullback in a down market. See, shorts has formed a divergence. So that's what it's telling us there. See the NASDAQ pulling back into here. Let's see if the OR mid can hold. Right now, it's blue. If this dumps too much more, then we'll go to gray. And if we look on the structure chart, right? And I don't even have the volume analysis. It's on the 5 minute. See how the 5 minute has here's volume point of control on the ES. So right now, this we draw this trend line now that we have more candle bodies. This is probably going to hold right here. Okay. Right here, 59 entry. If it pushes through it, I would add it like 54. The trend is still up. It's blue. It's a deeper pullback. So yeah, so like I said, right in here, okay, the first time we could hold, or at least get probably back towards 65 or scalp, a nice scalp. So, and again, this is a trend line. Don't listen to people who don't know what they're talking about. Trend lines don't work. They don't know what the frick they're talking about. I've coded the stuff. I work with some of the best companies in the world. I know what they look at. They look at everything, and the computers can do. Yeah, if you understand how the computers work and what they're doing and stuff, you're golden. All right, so whatever. 57, I said it would get probably back up towards there. Okay, that was like 7 points, enough to pull your stop up, which is all I care about. I don't care if I am. When I traded on the floor and the people I learned from in the firms, one of the first things they teach you is they take a loss. It's like a small loss. It's like get in, get out, get in and get out, get in and get out. You know, take a small loss, small loss, small loss. And then when the market gets like all of a sudden some large orders come in, you just jump on it and you ride it. And it's the same philosophy there. Okay. And it works. And it's all about risk control. Okay. So that popped up there. It's failing. Okay. Do I care? No. The market was aligned up. It was a deeper pullback. I expected that it could fail. But the first time down to the test, I said, boom, it's good for a scalp. It went 55 to 60, 65, whatever, 7 to 10 points or something. Enough for me to get a partial and then get out. Then the next time, I'm not like buying it again. It's like, well, okay, we may be rolling. And I would be looking at other stuff like this. Here's the internals. I don't go to really trade against the internals. Whoops, you don't need that. Here you go, annotator. Okay, look at, I can't draw it on there. Still down. Advanced decline started flattening out. We were, strengthening, but look how weak the tick got. Okay, so from about 9:55 on, it's been even. I don't care what you're seeing on the charts. You'd probably want to be very cautious about longs and be looking for, like, see the spike here at 10:07 into everything else is negative. So 10:07 would be an area where, and I can set an alert for that. I just don't have it on. Okay, 10:07. Where's our charts here? Okay. So 10:07 over here. Look what happened at 10:07. Huh. That's what I like to say. Huh. It's like, I looked at indicator and there's 10:07. There's a divergence here. That was your high. Huh. And now we're seesawing down. Doesn't mean it can't come up again, but this, when you saw this over here, gave you a clue that might, I might be looking for a top in here, because this would be painting up. And even if you waited for that to finish, it's at 10:08, that gives you a chance to, to get in here. See how these two lines turn color as well. And look at our trend line here. What does the NASDAQ like to do? It likes to probe and do price discovery. How does it do that? It does it by basically pushing through and testing different levels, and at the same time simultaneously screwing people. So what happened here? Here's our trend line that people will tell you, like, oh, it'll work. Yeah, well, trust me, they do. And you got to know how to draw them properly, which you will learn. So you see this TTF here, we're still 95% above. We came to the bottom of the opening range right here. See, back to last night, that's the opening range for the first hour. Same thing as we have, during the day, all right? So there's opening range here, came down, almost touched it, and the trend line still held. The trend line, what matters are the opening closes, not these are retail traders. These are the people who don't know what they're doing. And that's a liquidity run. That's, you know, where the institutions are getting their orders filled. So they're getting short up here while the other people are trading breakouts. It's like, yeah, how did that work for you? Okay. If you don't know that these are, you know, resistance zones and support, you know, good luck to you. You're trading blind. So yeah, down here, the first time down, if you, again, part of that manual, I'd be buying in here. Okay. If you had bought it in I layer a lot of times, we have a layering tool that automatically will layer, and it layers how you're supposed to, which is a reverse pyramid. And that's how firms trade. Okay, so you'd be in, I'll just say 51. And now we're up at 70. So there's another 20 points. Okay. Let's see. And look, and I can look at the MES here, or ES, it doesn't matter. Let me shrink these down a little bit here. I haven't touched the ES chart. I drew these in at like 9:30 or something. How did that work, right? TTF down to support, hits the trend line, bounces, opens over here, straight up, okay? And where does it also happen to be? The overnight opening range low into this. It's a confluence of support, okay? So there's 6 points there, and there's $300 on a one lot. So, you know, I'm not cherry picking. I'm just in real time showing you this stuff. And you know, this is how to trade. This is how somebody who knows what they're doing trades. And right here now, you know, we're pushing up. There's good support in here. See these high, right now we're still down, but we could be shifting up. We're still blue over here. See, we're blue and gray. This could fail in here, okay? He's got natural gas coming out. I have, you know, all these different types of automated things for reports so I don't miss anything. When people say like, oh, I didn't know there's the news coming out. It's like, well, that's your own fault. That, you know, if you're a professional and you want to take this stuff seriously, you know, there's plenty of tools to understand. So if I sell right here, just for like looking for a scalp, and pull this stop, oops, up. I don't.
Russell entry signal short entry on the RTY84.
So we had this move up into here, okay? So I may expect like a small pullback to 74, which is right in there. And we could come back down to 65.
Crude oil 5-minute trade set up. Crude oil 5-minute trade set up.
All right, that's one of the alerts of the English guy. I have the coming from, you know, again, fighter pilot background in planes. I have alerts. They call them bitch and Betty's there, but most of the ones we have are women on that one. So I use the male voice. So I know I'm going to move my stop up here, and I'm going to wait for this to reverse down. I use the male voice to differentiate from them for those signals. So I know what signal to look for and what chart and stuff. We're still pushing up. So you notice, I just wait. I'm looking over here to see where we're going. We're coming into that high of these candles right here. I'm going to sell one more. All right. And what I'm doing here is just raising my average. So now I'm going to take one immediately off to reduce my risk. But I have pulled my average up by doing that. And now I'm going to pull my stop in. And I'm looking for just a normal retracement. So that was a little tool, a quick add and then a quick take it off. All I did is I pulled my average up from like 3 points by doing that. Again, that's a trading technique because boom. Okay, there. Now I've got 2 left. Now it's a,
Filled.
as I say, a free trade. This now, do I expect this to melt down? No. I expected to maybe go back to 65-ish, maybe down to 61. And it could melt down, but I'm going to split the difference here, 64.
Setup signal long on the NQ168.
And I'll just let that go there. And if it hits that, I'll be happy with that because there's a lot of support in here. 62. So I'm front running that a little bit. This tells me when this is going to flip long. We got to 69. Kind of think it could get back down to about, well, 68 is one first level. Next stop would be like 63. It's 10:28, so that means this candle right here is going to finish in a minute and a half, and then we're going to shift over here, which that shows me where we'll intercept this trend line. Okay. See, this is going to shift over to here, and that means that a low of this candle would be right about the 50. So 64. Okay. Watch when this thing finishes at 10:30. Plus, it's going to be a 10:30 candle, and that's when institutions, start their first hour trading. They get an hour candle, and they'll see movement. So we'll wait for this. It had 320 or something like that. I just missed it. Let me turn that thing off. Let's see what happens at 10:30, which is in 45 seconds. See, it flipped. The candle flipped. So now will probably take me out here, but I'll leave it where it is. See, this is working its way up. It's kind of flat. Okay. All right. So 740, not too bad. We were at 3 something, and I pulled it off, it'd be like 900. But I've shown, I think, about 7 other winning trades. The point here wasn't to show you like 10,000 like winning trades. I think I pointed out about 4 in real time. I don't think I really pointed out any losers. And that was like managed risk, a 2 lot. I don't think I ever, really trade more than 2 lots. Because you can tie them together if you want that, but you're not going to blow out account. You trade a 5 lot, you can, blow out an account. If you trade a 2 lot and you're managing your risk properly, no. I actually, when I trade on my own, I trade 5 and 10 lots, but that's for my account size. And I use this method a lot, but because I know the risk, and I have ATMs that manage it very, very well. So. All right, I'm going to end up wrapping up here soon. It's been a full hour. Okay, there's 10:30. That was kind of a very, very calm first hour of the close there. Usually we get some kind of activity at 10:30. One other thing I wanted to bring up was what I call the Wayne Gretzky. It's an analogy. And that's how I like to trade. Wayne Gretzky, the greatest scorer, greatest all-time NHL points leader, so far in front of the rest of the NHL All-Stars and Hall of Famers, that if you took away all his assists, all his goals, he would still be the all-time leading points winner with just his assists. That's how far out he is from everyone. So, and something that was kind of funny was in the when he was playing Pee Wee hockey. I grew up in Boston, so I played hockey pretty much my whole life. But that age is like about, I think, about 12 and 13. He had seasons where he had like 500 points. I mean, if you're going to believe that, he was getting like 7-8 points a game average and stuff. But anyway, when he was early in his career at Edmonton, I believe, a reporter said, why do you think you're so good? What makes you so different than everyone else? And he said, well, I think, that it's because most skaters will skate to where the puck is, but I skate to where the puck is going to be. And which is kind of enlightening, because if you think about it, it's like a chess player thinking several moves ahead. So trading, I look at it that way. It's like most people are trading like in the moment and just looking at what's on the screen and not thinking about, hey, what's going on? This is a chess game. It's a video game, and you got to put the puzzle together, and you need the components and you need the tools to help you see that. Okay. And the faster and better you see that, then that allows you to not trade where price is, but where price is going. And if you know where price is going, then that tells you whether you want to even take that trade or not. And if you do take the trade, it tells you, like, is it going to go a long way or is it going to go just a short way? But knowing all that, knowing where price is going, and is it 100%? No. But if it's 70%, you're still better off than most people who are jumping in and have no clue. Okay. So that's the attitude that you have to like look at. Okay. And a lot of these things are, it's structure, it's trending, it's consolidation, it's understanding pattern behavior. If you're not trading and learning from the right people, you're never going to know that. And you're only going to develop bad habits. You got to roll into that. You got to roll into risk management and trader psychology and things. But you got to understand what drives that. And a lot of times that's risk control and risk management. So those are all things you would learn from me and from our website and from both of the websites, and just how to trade a multitude of methods. I mean, it's really a core of about 3 or 4 methods that work over and over and over. But in order for them to work, it's getting, it's understanding them, and it's understanding what drives them and what drives the market. So it's like when you hear people say like, oh, I got beat up and then and as I quit for the day, or I was up on the day, and so I just figured it was time to stop. Guess what? If the table is hot, I'll use a trading analogy, the blackjack analogy again. If the table is hot, you don't get up and leave. You continue to lean on it. You keep betting, and you bet more. So on a day, I don't believe in, anyone who understands trading, you don't stop on a day that things are working for you. And the reason is because whatever your methodology is, if you're a trend trader or you're a support and resistance trader, that means that day, and you should know it if you're experienced, that day is that type of day. And you keep trading until it's not that type of day, because tomorrow may be, and the next day may be the totally opposite of what you like to trade. And they may be losing trades for you days before you realize that. So that's a key difference. Is like, if you understand that, on days where it's working, you press it and you increase your size and you keep trading. On days when it's not working, those are the days that you stop and you say like, I'm going to take a break. I'm going to come back at 1 o'clock or 1:30, because often the market is a different market then. Okay. Or you stop for the day. That's a big difference right there, is recognizing that you don't sit there and like revenge trade, beat the crap out of yourself, and then now you're psychologically scarred yourself for the next day and for the rest of the day if you haven't already blown out of account. So, all these kind of things come into play. But if you're not trading someplace or trying to learn these on their own, good luck. It's a long road. So, and at least you're fortunate that you can do, funded trader programs and EAs and PAs and stuff. Back in the old days, if you think it stings now, you should have tried it, when you blow out an account, for real, and then have to slowly build it back up to try it again. You can imagine, that road is a lot more painful. Anyway, so there's all that. So just check out the sites, Top Gun Trade, TradersEdge.com, Top Gun Trade Zones. Take a look around. I'm looking to start it hopefully by the end of November. Both sites, they're complementary to one another. You're gonna learn a lot. I would try to price them, reasonably, that for considering for the trade room. I mean, I put in 10-hour days, 10 to 15-hour days for the last year to do this for a year and a half to come to model all this and to do all this. You know, I've been putting in 15-hour days and it's cut into my trading. I don't even need to do it. I can just trade. But I like teaching. I want people to learn from somebody who knows what they're doing. But, you know, yeah, I'm going to charge for it. I mean, does a surgeon, you know, who I pay when I go to learn things, I'll pay for the best person or the best company I can afford to learn from. Because you get what you pay for. And ignorance, as they say, if you think education is expensive, you should try ignorance. So I'm going to where I know I'm going to learn it. I'm not going to try to cut corners. The room for the Trader's Edge works out to be, geez, a whopping, like, I think $15 per trading day. So, in the rooms, and just to put the reports together, put the stuff together, to do the analysis, to do all that, you know, I'm putting in at least 6 hours just on that per day. So I think charging $2.50 per person, if you can't see the value in that, then you probably, one, shouldn't be trading, and two, should go somewhere else. But I've never had anyone who's worked with me or the companies that I've worked with had anything to say but glowing things about how I help them. So that's about it, guys. I'm gonna, you know, end up signing off here. I actually am still working on the website. So if you go to the website, there may be some placeholders, some things that don't work. You can't obviously sign up for anything yet, but it's getting very close. So best of luck trading. Keep it, you know, keep things close to the vest. It looks like we didn't really talk about the average daily range, but that's another key component here. We're at 83 on the NASDAQ, so we're going to end up on the day somewhere around 200. Here's the opening range high, the opening range low. We will expand those, and I'm not going to get into how we use that and how to know which way it's going to go and things. There's
Signal short.
a lot of things you can learn in here, I guarantee you.
Dow
So
signal short.
I could go on and on because I love trading. I love teaching. I hope you join us when we do open. Feel free to sign up on the website for notices and notifications. And I look forward to seeing you in the room, and look forward to seeing you as a successful trader and hitting your trading goals. Thanks a lot, guys. Have a great afternoon. Take care.